Doesn't really change my outlook at all. I've been looking for the economy to continually slow from the strong position it was at in the summertime.
In recent years, the share of young people buying a house has fallen. Home ownership has become increasingly an older person's game.
The Atlanta Federal Reserve released data that could reshape the U.S. housing market in 2026, and honestly, it should make every buyer pause. Wage growth is slowing fast, affordability is collapsing, and demand is already weak. Today, we're breaking down why this could be the worst time to rush into buying. The Atlanta Fed's warning signal. Let's start with the headline number that's setting off alarm bells. The Atlanta Fed reported that wage growth in the U.S. fell to just 3.7% year over year in December 2025. That's the slowest pace in nearly 5 years, and it's now below the long-run 10-year average. When wages drop below trend while housing costs stay elevated, that's when affordability pressure really starts to bite. What makes this more serious is that the Atlanta Fed isn't alone. Other major wage trackers are flashing the same signal. The Bureau of Labor Statistics is also showing 3.7% wage growth. Paychex, which focuses on small businesses, has slowed all the way to 2.7%. Indeed's tracker is even weaker, at just 2.1% year over year. When 4 independent sources all tell the same story, that's not noise. That's a shift in the economy. Raises are shrinking, paychecks are growing more slowly, and that hits housing demand directly because mortgages are based on income, not hope. Why slower raises matter so much for housing. Housing lives and dies by wages. It's not about how bullish people feel on social media or how confident real estate agents sound on podcasts. It's about whether buyers can save a down payment and pass underwriting standards. If someone got a 4.5% raise last year and only a 3.5% raise this year, that's real purchasing power lost, especially after inflation and higher insurance and tax bills. And right now, that's happening while home prices are still sitting far above historical relationships to incomes in many cities. Some commentators are saying the market is about to turn the corner in 2026. That demand is going to surge back and bidding wars will return everywhere. But that story is hard to square with slowing wage growth. It's tough to imagine a buyer suddenly stretching further when their raise just got smaller. Early 2026, data shows buyers stepping back. Now let's talk about what buyers are actually doing. Redfin recently reported that pending home sales at the start of 2026 are still down around 1.5% year over year. That may sound mild, but remember, that decline is happening on top of already record low demand levels. Just a month earlier, Redfin said buyer demand hit the lowest level on record. ShowingTime is telling a similar story. Home tours for new listings are down 19% at the end of January. At the same time last year, tours were up 11%. That's a dramatic swing, and it suggests that foot traffic in open houses and private showings is drying up. Fewer tours lead to fewer offers. Fewer offers lead to fewer contracts, and that's exactly what we're seeing right now as 2026 gets underway. Nashville's reality. In Nashville, Zillow listings in some neighborhoods show homes priced from $700,000 all the way up to $2 million. To afford the typical home in the Nashville metro area, buyers now need to earn over $116,000 a year, and in many cases, closer to $120,000. In certain zip codes, that number jumps to $250,000 or even $300,000. This is a city that, 5 years ago, was marketed as affordable compared to New York or Illinois. People relocated here because prices were lower. Today, in many pockets, Nashville is just as expensive, if not more, and demand has plunged as a result. Winter Storm Fern isn't the real problem. Some people will point to weather for the slow start to the year, and Nashville did just get hammered by Winter Storm Fern. Ice storms knocked out power to roughly 230,000 people at the peak. And you can still see fallen tree limbs scattered across yards and streets. Bad weather absolutely delays tours and closings, but here's the key thing to understand. Pending sales and home tours were already weak before the storm arrived. Demand was trending down anyway. The weather didn't cause the affordability crisis. It just made the slowdown more visible. The salary required to buy a home is shocking. One of the most revealing statistics in housing right now is the income required to afford a typical home while keeping costs near that 30% rule of thumb threshold. Across the US, that salary is now well above $100,000. Let that sink in for a second. You basically need a six-figure income just to buy an average home. The median household income nationally is around $84,000. That gap explains why so many families feel locked out. In Las Vegas, buyers need roughly $110,000. In Orlando, about $120,000. Miami sits near $147,000. And California is in a completely different universe. Across the state, buyers need close to $200,000 just to compete. In Los Angeles or San Diego, that jumps to $250,000 to $300,000 for a basic 3-bedroom, 2-bath home around $1 million, with monthly payments pushing $7,000 to $8,000. Then there's the Bay Area. According to Reventure app data, San Jose is the most extreme example in the country, where buyers need to make over $400,000 a year to afford the typical home. Those numbers aren't normal, historically speaking. They show how detached prices have become from local incomes, where homes are still within reach. Now, it's not expensive everywhere. There are still pockets of affordability if someone is flexible about location. Pittsburgh is one standout, where the typical buyer can qualify on about $64,000 a year. Little Rock, Arkansas comes in around $61,000. Border cities in Texas, like El Paso and McAllen, fall under $60,000. These places prove that affordable housing still exists in America. The problem is that most people don't want to relocate hundreds of miles away from their families or careers. Jobs, social networks, and lifestyle matter, and many of the cities with strong job markets remain painfully expensive. A market that's splitting in two. Here's what makes 2026 so complicated. Nationally, the housing market feels recession-like, with demand weak and buyers cautious. But locally, conditions are wildly different. Some markets have already seen steep price drops, like Austin, where values have fallen sharply. Other areas are still heating up and seeing bidding wars. Forecast models like those from Reventure show this split clearly. In parts of Nashville, price projections are negative, around -8% or -9%, which could give buyers serious negotiating leverage. In Williamson County, near Franklin, forecasts are closer to -1% or -2%, meaning softer conditions, but not a dramatic collapse. In contrast, places like Wilkes-Barre and Scranton, Pennsylvania, are projected to grow more than 6%, which explains why buyers there are still getting frozen out by competition. This isn't one national housing story anymore. It's dozens of local ones happening at the same time, what the Atlanta Fed data really implies. So when people hear Atlanta Fed warning, what does that really mean? It doesn't mean the Fed is literally telling everyone never to buy a house again. It means the wage data they track is flashing caution for demand in 2026. Slower income growth, already stretched affordability, weak pending sales, and shrinking home tours form a dangerous combination. Unless wages suddenly re-accelerate or prices fall meaningfully in more cities, it's hard to see a strong nationwide rebound in buyer demand this year. That doesn't mean nobody should buy a home. Life still happens. People move, get married, have kids, change jobs. But it does mean buyers need to be more careful than they've been in years, especially in high-priced metros where incomes simply haven't kept up. As 2026 unfolds, keep your eye on wage growth reports from the Atlanta Fed, the Bureau of Labor Statistics, Paychecks, and Indeed. Watch pending sales from Redfin, pay attention to showing time tour data, and most importantly, Look at how home prices in your own city compare to what people actually earn. Those numbers, more than headlines, will tell you whether the market is stabilizing or sliding further. Now we want to hear from you. What city do you live in, and how much does the typical home cost there right now?